What up, church? What up, new bro?
Hello.
Hey, how's it going, Nathan?
Hey, good. I finally got the techie stuff going here. That's good.
Hey, let's go.
Hey,
How you doing, everyone?
welcome to the Face Space.
Great. This is great. The more I learn about your show, the more I love it. Mm-hmm.
Is this
Thank you,
your
man.
first Twitter Spaces?
Yeah, it is. I'm a virgin to Twitter Spaces, so take it easy on me, huh?
We're popping the cherry. Let's go.
Just roughly, I know you'll go over the format, but I assume you just want questions answered more like just briefly and just to the point, right? So you can go on with other questions. Is my understanding? Mm-hmm.
It depends where the discussion is going. To be honest,
Okay.
if we kind of tangent off of the questions, I'm completely fine with that.
Cool.
As long as we're providing educational content that at the end of the day for people to learn about realty, I'm about it.
Nice.
Don't feel the need to taper your answers because it may lead to another conversation. So we're just here to soak in all the knowledge. So please.
All right. Well, okay. Well, let's do it. And how long is the show? Just curious. How long do you usually have it for? Mm-hmm.
Yeah, it varies. I mean, we normally run from maybe an hour to 2 hours. It really depends on the conversation and how long we go.
Great.
But we can work around your schedule. So.
No, I'm fine. I'm available. Looking forward to the show, and I think a lot of our listeners at Realty, we have a very spirited community. They'll probably be joining. I know that our marketing has advertised the show to our community, so hopefully some good audience.
Awesome. Yeah, if they what they could do is I tweeted out the link to the space, so whoever operates the Twitter account could retweet the stream link.
Yeah. Where are you based? What area of the world?
East Coast, U.S.
Oh, nice. I'm in California, San Diego. I'm in San Diego, California.
Oh yeah. How do you like it?
Raised here. I love it. I guess home is wherever your home is, I guess.
Yeah. Yeah. That's sweet.
Yeah, I feel that. I'm in Colorado.
Nice, Colorado. Yeah. Where in the East Coast are you? What state?
Georgia.
Georgia. Nice. Atlanta. I was in Atlanta before the pandemic. I love the Coke Museum. That was fun.
Oh yeah. It's got 40 or 50 something Cokes.
I didn't realize that there were so many varieties of Coke.
Yeah, no. We're an economy based on sugar.
Yeah.
What else did you see when you were in Georgia?
So let's see. I was there for a graduation. There's that art school there, which was
SCAD.
SCAD, exactly. And my nephew graduated as a valedictorian.
Oh,
there.
Nice.
And so had a great time. And I've always been in and out of Atlanta, but never really explored it. And I was there for 4 days. I really got to see a lot of. I had a scooter, so I'm running around with my electric scooter, with my bird eyes scooter, and I'm running 30 miles an hour down the freeways and stuff. I was like, okay, without helmet or anything like that. That's funny.
Oh yeah, one time I almost got hit by this truck. So in the city, you noticed there's parking garages that are on the street, kind of the bottom floor just comes out to the street.
Yeah,
and I was coming down this hill on it once with my friend, and this truck just came flying out and almost hit me. I saw my life flash before my eyes. It was so. Ever since then, I vowed to never ride those birds. But they are fun.
You got to be careful on those things, man. People are not looking out for you. I remember in
not
my
at
city,
all.
Yeah, it became an issue. And they actually they started handing out I think DUIs if you were drunk riding those on the road.
That's funny. DUI. I mean, first of all, so you're holding one hand with the scooter, and the other hand you've got a beer, right? Is that what it is?
Just
that's
imagine it's
funny.
like like the old school like razors back in the day that would just like destroy your shins.
Yeah.
It's basically just an automated version of that. Like you can get a DUI. It's just crazy.
Oh my god! So how the UI? You go to a judge and say, "I was going 10 miles an hour." That's good. I want to be that judge. Yeah, it's like, okay, next, please.
He's like, "You're good. Just don't do it again."
Yeah.
Hell yeah. Mirta, do you want to kick things off, or are we waiting on some more people?
I think we can actually. I think we can dig in. I think we're ready to go. Atham, really, really excited to have you on the base space, man. This is awesome. I'm U2, the founder of the base space. Super High, you just want to introduce yourself real quick?
Yeah, so I'm Super High, the one that was just laughing with you. So I guess the title is community manager, but I really just tweet with the community all day, every day, and help set up episodes for us and help with the questions that we ask them. Kind of work on NFTs / digital art in my free time, and learning how to code. So.
Jason, my intro.
I'm passing the torch.
Yeah, I'll hop in. Hey, I'm glad to be here. I'm Chase. I'm one of the team members on the base space. I work on just bringing on projects like yourself and helping bridge and establish new connections within the community, so we can kind of help bring as much knowledge and value to the community, just like our listeners as a whole. So I'm excited about this chat because this is such a unique use case of like blockchain.
Well, wonderful to meet you.
Yeah, 100%. And Hatham, for everyone that's listening in, is one of the lead engineers at Realty. Really excited. You're newer to the team, correct?
Yeah, I just recently joined about a month ago at Realty. So it's been a fun ride so far.
That's awesome, man. No, we're really, really excited to have you on. We have a lot of Link Marines that listen to the show, so we'll dig into that a little bit later. Kind of curious, Hatham, like how'd you get started in crypto? Like, what was your first time being exposed to the space?
Yeah. Well, first of all, I just want to thank you for inviting me here. As I learn more about the show, I'm just like very impressed with it, and now that I'm at the panel, I'm even more impressed. So, in terms of how I got into the crypto space, like many of us that started in this industry, I read Satoshi's paper that came out in 2008, which, as we all know, became the Bitcoin chain. Soon after, I found myself dabbling with this new thing called mining. During this time, I quickly realized the disruptive nature of this new thing, not only in the cryptocurrency space, but also the underlying blockchain technology that could fundamentally enhance our internet through decentralization. Since then, I've been involved in various blockchain-related initiatives. So this is where I come from. Mm-hmm.
That's hella days. So did you actually mine Bitcoin?
Yeah. Actually, in 2011, I left my computer on for 2 weeks, and I mined my first Bitcoin in 2011. Sold it for $13, as I recall, and I kick myself every day for not leaving my computer on and longer.
Have you like quantify what that would have been had you like just left it running?
If I would have left it running, what was the question again? Mm-hmm.
Yeah,
Chase, you were like,
oh, sorry, I was receiving a phone call. Honestly, I would be scared myself to do this, but like, have you ran the numbers to see, like, had you left it running, what would it like approximately be? I don't even know if that's even like possible. Like,
I did, and I had a nightmare, and I couldn't sleep for 3 days.
Oh, okay.
It was definitely the peak prices. We're talking, if I would have left it for 6 months to a year, you're talking about $30 to $50 million. Depending on the speed of the processor. So, hey, Who would have ever known? It was funny money back then.
Yeah. You can't be any worse than that guy that spent 10,000 coins on a pizza, man.
Well, an interesting thing about that story is that I actually had to go to Western Union to actually receive my funds, which is a whole different story. But because it was all dark web back then, and you couldn't liquidate, there was no liquidity pools, and so.
Yeah,
that's super funny.
So funny. And after Bitcoin, did you dive into any other coins? Did you mine Ethereum or anything around there?
I was mostly involved in really the Bitcoin, and just started to get more into the blockchain technology space as a whole. Obviously, cryptocurrency is a vertical of blockchain, but I was more intrigued in the blockchain as a technology in the whole. So that's really where my interest started going towards, just because of my background as a person who develops enterprise software systems. Mm-hmm.
Yeah, that makes a lot of sense. And now you've discovered yourself at Realty. How'd you wind up becoming a member of the team?
Yeah, it's funny how life works and where we find ourselves in, isn't it? In 2000, yeah, it is. In 2014, I was involved in a technology real estate startup where I learned the good and the bad about the real estate industry. Nevertheless, the industry intrigued me quite a bit. In particular, I mean, for most people around the world, buying a home is the single biggest investment they make during their lifetime. From then on, I knew that I wanted to play a role in the next evolution of it. Realty came along, and it had the marriage of my two passions, real estate and blockchain. Hey, what else could I ask for?
That's awesome. That's awesome. Did you know like any of the founders of Realty before you joined?
I actually didn't. So I had a introduction to them, and I was just impressed. Yeah. Yeah.
That's really, really cool. And then for everyone that's listening that might not know like what Realty is, could you kind of give us like a like an elevator pitch of what exactly Realty is about?
Yeah, absolutely. The company was started actually recently in 2019 by two remarkable brothers with a history of success, Remy and Jean-Marc Jacobson. To put it simply, Realty, we allow individual investors to own a fraction of a U.S. real estate asset for as low as $50. These assets are occupied with renters, which produce a continuous yield that we disperse to those individual investor owners. We disperse this yield in the form of a stable crypto coin like USDC or XDAI. To date, we've sold over 100 properties with about $14 million in sales. And as Remy and Jean-Marc would say, we have humble beginnings, but we are aiming high.
That's really, really cool. I mean, it's opening up so many doors for just like the average person, right, to become involved in real estate.
Oh, it's absolutely the case. Real estate has long been an industry that has, in my opinion, has been left behind by not just different generations of technology. And it just has to do with the complexity of the process, of the real estate transaction process. I agree with you. Mm-hmm.
Absolutely. Hey, Chase, you want to ask that the liquidity question you had there?
Yeah, I found this really interesting. I think I was reading I think it was in your white paper. It just kind of like touched on the like illiquidity of real estate, traditionally speaking. And I was just curious, like, like how big of a problem is that in real estate, and like how big of a solution is Realty to like the average like person who may not really understand the like intricacies of the market like that?
No, very good question. It's a major problem, and really it is a core part of our value proposition. So let me just spend a minute or two in kind of describing what the problem is and also the solution that we at Realty are offering to mitigate this problem. As we all know, real estate has long been considered an illiquid asset since it takes time for sales to conclude. This isn't the case with cryptocurrencies and tokens, since they can, in theory, be readily traded for fiat currencies through exchanges. As tokens, real estate can be readily traded. A seller doesn't have to wait for a buyer who can afford the whole property in order to get some value out of their property. So in other words, what I'm trying to say is that tokenizing real property offers the opportunity to trade the asset, much like stocks on an exchange, and transactions can be done all online. So at Realty, we bring this vision closer to reality. We are building an ecosystem on top of our smart contract protocol to allow shareholders to take part in the liquidity pools. Okay. And some of those liquidity pools, we have a partnership with LevinSwap. Many of you have heard of. They are a decentralized exchange that allows trading of tokenized securities, tokens. And we have other partnerships as well, like Uniswap, SwapCat, and AirSwap. Mm-hmm.
That's super interesting. And then, kind of going with the liquidity, it's my understanding that each property is kind of its own separate entity, and therefore would be like its own kind of pools of like liquidity as tokens.
Mm-hmm. Yeah, absolutely. So this is, let me describe this so our audience can understand this. This is our approach to creating a security token that ties directly to the fractional ownership of a U.S. corporate entity, which is the LLC. Each real estate asset is owned by one LLC series. So, and all our assets are debt-free. Once an LLC is tokenized, once we tokenize it, we offer the tokens for sale. In essence, we've created a legal relationship between the asset, LLC, token, and its owner. And that's what we do.
And so what is like kind of like the primary goal or like purpose of like kind of approaching it in that type of manner?
First of all, we wanted to maintain safety of investment. We wanted to make sure that our investors feel safe, that they actually truly own a piece of real estate and that asset. And the way to do it is that right now it's impossible to tokenize a real estate asset itself. And hence, what we do is we wrap it around an LLC, which offers advantages. We wrap that around it, and then we put in a bow tie. We do, and we offer it as a asset to be owned. Mm-hmm.
All right. So, okay. So, you have a property, you create an LLC for this property, you wrap it essentially as a bundle, you tokenize it so you can put it on the blockchain. Like, how are they actually tokenized, and like, how are like the number of the tokens for like the properties kind of determined? Like, how does that relationship work from actually bridging that real world gap to like the blockchain?
Yeah, it's a good gap to bridge. It's quite simple, really. So once we acquire the real estate rental asset, we add the costs associated with the acquisition, like repairs, the property management costs, the reserves, and then we also add our fee on top of that. And we also, after we do all that, we also calculate the cap rate, or what is called the rental yield the shareholder is expected to receive. It typically ranges from 8 to 12%. And then we advertise to our clients along with the total cost of the property, this yield that we have. And in terms of the number of tokens and how we do this is we take the total cost that I just described, and we kind of divide it really by $50 or sometimes up to $150. And we come up with a price per share. And that's how many number of tokens we offer.
Gotcha. Okay. So how does the property acquisition like occur? Like, can you partner and like, say, I don't know, maybe somebody's a real estate agent, like listening in the chat. Can they kind of partner with you guys and kind of show properties, or is this a or the properties found by Realty? Like, how does that work?
Yeah. At this point, our offering is that we have our own agents that find us the properties that we would like to offer. So we don't offer our service to independent agents. It's just us at this point. However, in the future, we are developing our Realty protocol, and we hope that that will be an enabler to independent agents or organizations to use the protocol to come up with new innovations, like, for example, tokenizing a different kind of asset, a home, a commercial property. But for now, it's just us finding the properties, doing our due diligence, making sure that they have a good cap rate, making sure that they're tied it up with good property management and the whole process that we go through. So that way there's consistency in the yield that we provide our investors. Mm-hmm.
Do you see like Realty as well exploring crowdfunding in terms of being able to raise capital to actually purchase properties in a group?
I think that may be an option for us in the future, but for now, we are really just trying to focus on bridging this gap that we described and really trying to do it in a proper way. As you know, we are international, and we have many regulations and compliance to go through. So we're going to take one step at a time. We are going to first build the model, make sure the model is successful, is repeatable as we've done, and then see where it goes. I mean, this is a changing world. It's in flux every week. We have something new. We never know. Mm-hmm.
Yeah, that's a good point. You guys are currently international. Curious around like your thoughts around U.S. residents being able to participate as well.
Yeah, the short answer to that is no. For now, let me explain. We plan on formally entering the U.S. market before the end of the year. Currently, all our investors are international. We have clients spanning over 46 different countries. So let me just kind of add a bit about the subject to kind of help the audience understand some of the factors involved in our entry to the U.S. market. So the requirements for international investors to invest in the U.S. is less stringent, but they still have to go through a regulatory approval, such as KYC, Know Your Customer, and anti-money laundering certifications. In the U.S., it's a different ballgame. You have to meet the more stringent requirements of an accredited investor. Even when that requirement is met through our process, the properties that we offer for sale have to comply with the SEC regulation, what is called Regulation A and D, which we don't offer currently. We offer what is called Regulation S properties, which can be sold to international investors. However, when we enter the U.S. market before the end of the year, we will devote specific properties to the U.S. investors in compliance with SEC regulations. Mm-hmm.
Wow, that's awesome, because I feel like that opens up a huge door for Realty, and also I know a lot of my audience is U.S. based, so I mean, I can imagine you'll see like a very large influx of consumers interested in the product.
Yeah, no, we definitely look forward to entering the market. We're going to do it right. We're going to make sure that we are involved in getting ready for it. We have hired the top law firms in the world. We are based here in the United States, our company, even though we sell to international users. But the trick here and the name of the game is we have to do it in such a way where it's legally top notch, and the investors have complete and 100% safety, that feeling of safety in their security. No one has done this before. We are charting the path, and we will make mistakes, but we want to make sure that those mistakes don't hinder the safety of the investment that our investors are holding. Mm-hmm.
Super High, I saw you went unmute. Did you have a question?
No, I was just going to say that's super respectable. Putting safety and security first and the consumer first, rather than yourselves or the team.
Yeah, we could. I mean, a lot of. I mean, I'm sure there's going to be companies that are going to do. There are right now. There are companies that are duplicating these models. They have different twists to them, but I'm sure that they themselves will be successful in some areas. Again, part of our culture. We are a small team, and part of our culture is the individual investor. That person that is relying on us, that is really trusting us. And we have to make good with that. And we have a community of 12,000 organically grown members that believe in us. We didn't advertise, and we got to make sure that we hold our promise and make sure that nothing happens. As you know, anything can happen when you don't tread the right way legally in the compliance way. There's a lot of things that can happen, and we want to make sure that doesn't happen with us.
Could you that actually touches on an interesting point. Could you kind of like touch on like the relationship of these wrapped properties that are going to be LLCs and the relationship with realty? So like, for example, like say down the line, you have these investors that have shares of these wrapped properties and they own a portion of this LLC. And like, if something was ever to happen to the realty business, would that have cascading effects, or they're completely separate entities?
Yeah. No, I'm glad you asked. I mean, this is a very important point. It's a good question. And this is one of the reasons why we have chosen our approach to doing this. We've designed our business model to safeguard the individual's investment if such an event were to happen. I hope it doesn't happen, but if it does happen, we've safeguarded it. And let me describe how we do that. Our LLCs function as standalone legal entities in the U.S. with all the rights and protections. We have a separate organization called Real Token Inc., which manages the day-to-day operations. That is a separate organization than our LLCs. If Real Token Inc. was to go out of business, then all the token ownerships will not be affected and retain the assets. The value of the tokens will still be tied to the value of the real estate asset in the LLC.
Gotcha. So it's kind of like realty is the system in which these properties are acquired, wrapped, formed LLCs, and then from there, once the LLCs are formed, there's no longer that relationship, and it's completely its own standalone entity. Is that right?
That is completely correct. This was really to ensure that there's a direct relationship, one-to-one relationship, and that's why we only have one asset per LLC. It's very simple. And the token is directly tied to that LLC. This is the closest you can get to legally having that ownership in place in this country. Mm-hmm.
Yeah, no, that is really interesting, and like I like that because whenever you look at assets, you're looking for that longevity, and so when you remove a dependency on a business, and it's more now you're just solely looking at the asset itself, or a tokenized representation like a wrapped asset, and it's separate from the two. As an investor, that's something that I would that's important to me. So that's pretty cool how you guys are approaching this.
Yeah, I mean, if you look at the comparison today, the closest you would get to a comparison is a real estate investment trust, a REIT. And if you look at a REIT, the organization, all the assets are tied into one organization. And when you invest, you're actually investing in a bundle of these, and you truly don't have a clear path to what you own. And the barrier to entry in REITs is typically about $5,000 to $50,000. to get in. And that's a lot of money. A lot of people can't afford that to have that. And so we've lowered that barrier entry. We took away the bureaucracy. We took away this blur, I call it, between that individual and owning a real estate asset.
Gotcha.
Oh, good. My bad.
Yeah, no, go for it.
I had a question just about the payments, right? So if a property has rent payments, how are they collected and how often would the holder get paid?
Yeah. So all our properties are rentals, first of all. We specifically target government assets for low-income renters like Section 8, and they provide consistency in the yield that we provide. So the property management associated with the asset is the one responsible for collecting rent and delivering it to us, which we then disperse to our shareholders on a daily basis. The rent distribution is done by depositing the rent amount in a smart contract vault using a stable coin like USDC or XDAI. The investor has access to this vault and can pull the money, the coins, at any time. In some cases, we automatically distribute the rent to the Ethereum wallets that they have, but that depends on the price of the ETH gas. And as we know, that is fluctuating all over the place.
Oh, that's super interesting. What do you use your own vault, or I missed that part? Or do you use someone else?
We use our vaults to hold that, but they're directly connected. Our smart contracts are deployed on Ethereum, and they're fully compliant with Ethereum, and also all our tokens are ERC20 tokens. Mm-hmm.
I actually I had an idea or interesting thought, like with 1031s, like would that apply in this situation? So could you do a 1031 exchange with these like wrapped tokens that represent real estate and buy another form of that real estate? I know it may be like a slippery slope. This is not legal advice. No one take this. Consult your own.
Yeah, you know what? Well, I feel like why don't you apply to realty, because I think these ideas are awesome. So let me just kind of briefly answer that. Just for the audience listening that may not know what a 1031 exchange is, it's basically a swap of real estate investment for another, primarily for the purpose of deferring capital gain taxes, right? It is defined by the IRS, and the swap, I guess the criteria of the swap has to be, the exact language is like kind. So back to the question, would a 1031 exchange work with realty if you sold, let's say, your tokens? The answer to that is maybe. All right. And I say maybe. And this really depends on how the IRS will view the token transfer. If they view it as a security exchange, the blockchain, and use the blockchain as proof of like kind, then it is conceivable to execute a 1031 exchange. But again, much of this regulation right now is in flux. So anything can happen.
That would be so bullish if they roll on that side of the fate.
Oh yeah.
We got a quick question from the audience. Nubra is asking if you guys are planning to use keepers for the smart contracts.
And actually, at this point, we don't have any plans. But again, things could change, and we may very well utilize it in the near future. Yeah. Mm-hmm.
I also saw that you guys are using Docusign as part of the tech stack. Can you kind of cover like how you guys are planning to use?
Yeah, as part of our process that we go through, as you know, we have our tokens, we have our KYCs, and we don't specifically use Docusign. We use a similar product called HelloSign for our document signing. And it is, again, it's very similar to it. And we have, along with HelloSign, we have vendors, external vendors that do our KYC services, really to expedite the onboarding process. And, I think this is a good time to really mention something about this, the process that we have. And it's a very well-planned process, and we focus on it tremendously, of course, because we're growing. It's important to mention that our culture at Realty is doing everything we can, to make sure that we are compliant with the regulations around the world and to protect our investors. And in our culture, our founders, Remy and Jean-Marc, it's every day when we have our meetings, they keep emphasizing this critical point of making sure that our process is heavily on the side of conservatism. It is the reason why we have grown organically with our community. So it's important that we keep everything safely, and we use good vendors like HelloSign and other external vendors.
No, absolutely. I really just in like the 30 minutes we've been talking. I mean, I kind of get the whole vibe that you guys are, doing your due diligence, like extremely cautious with how you're, like what partners you're working with, and taking your time to execute every little detail of Realty properly from the very beginning, so you can avoid hiccups down the road. I think that's a really, really positive point, because a lot of projects that I see, like there's new projects dropping every day, and everyone's in a big rush to get things out. And it seems like you guys are, you're moving quickly, but at the same time, you're doing your due diligence. And if something isn't working correctly, or you don't feel like it's a good fit, it sounds like your team isn't gonna move forward, and you'll evaluate other options, which is awesome.
Yeah, it is. And it's such an important point, because really the spirit of the team and the culture that you have is exactly that. You're right. There's a lot of companies that rush, they don't think about it. And it's such a sensitive, I call it a sensitive area, like real estate, which no one has been able to penetrate with blockchain yet successfully. I'm sure there are lots of things going on. If we are going to be a trailblazer, I would agree with you. And this is what we believe in, and that is we need to trailblaze, but we need to trailblaze with the focus and the right intent, really, humanitarian intent.
Absolutely. I mean, it's awesome. Kind of going back to the tech stack, I wanted to dive in a little bit to Chainlink, and how you guys are planning to use Chainlink with Realty. I was reading that you guys are planning to use it to help with independent property valuations.
Yeah. So yeah, absolutely. And other services as well. Chainlink, along with the Link token, all right, is going to be an important component of our Realty protocol. We will utilize what are called the oracles, right, in Chainlink, to bridge our smart contracts to external data to build out our ecosystem for the real estate industry. And as I just mentioned here, to increase the breadth of our smart contracts and really give it that power, the power of our protocol, we need API services to access data like appraisals, capital indexes, automated valuation models, which are AVMs. We need all that. Otherwise, smart contracts become very limited. And hence, what we're starting to see is that we start to see oracles being popped all over the place that give us these services. I mean, some of them include Smart Zip and Prospect and all these, which today I guess they give like AVMs, and sometimes they give like even services like price per square foot. And new ones keep coming out, and we want to utilize them, and we really want to build this ecosystem step by step, because at the end of the day, our company is really two things. It's our Realty protocol, which we would like is an open source, and we want to have other organizations use it for their own innovation to manage real estate transactions, and also our Realty company here, which we will utilize our own the same protocol for our own innovation. And part of that is the Chainlink. I mean, we want to access all these services to build it out.
Yeah, I realize you may not have been on the team at the time. I'm curious if you have insight into the decision around Chainlink versus other oracles, and what made the team move with Chainlink versus another one.
Yeah, our technology stack is not firmed up. I mean, Chainlink right now is kind of the way to go. It is kind of the lead standard for oracles. It's easy to create oracles. It's easy to deploy oracles. And we are just looking at that right now. But however, I mean, we are also considering any newcomers or anything that is comparable. We will also consider those, and we might actually have multiple. There's nothing to say that we don't integrate with multiple Oracle providers.
Yeah, absolutely. That would make sense. I mean, depending on your business use case. Yeah, definitely. I think the community would love to stay in touch and see what oracles you guys decide to integrate. If you decide to expand it out, I'd be curious. I'd be definitely curious around that.
Yeah, I think one of the things that we are finding about the oracles is the maturity of the services. Everything's new in this industry, and we want to make sure whatever oracles that we do use, that there's some level of maturity, that the data is good data. It's not just something that is, just brought from not entirely accurate. And we have to assess that as well. And we're only going to work with good, reliable, solid vendors that offer these oracles.
Yeah, I think that's like a really key point you just kind of hit on. Like, one of the things that I think Chainlink does so well is that it's a quality marketplace for data. So it's kind of like you can go there and pull that trustworthy data out for your smart contracts to trigger certain functions. Is that kind of how you see it as a user?
Yeah, absolutely. I mean, think about the implications here. Let's take an example, like an automated valuation model, AVMs. For example, you have Zillow today that has Zestimate, and they get their estimates from these valuation models. I mean, if you and companies charge a lot of money to access this data, and if we provide an AVM that is not as good as the industry expects, and it's off by even small amounts. Imagine your house being off by 10% or 15%. It could throw the whole tokenization process into a spin. And so as we build out the ecosystem, reliability of oracles and the data they represent can make or break the quality of our service.
Yeah, I would actually be curious. Could you touch on some of the challenges that you face in this area, right? Because like Realty kind of is really trailblazing this area of like the tokenized ownership of real estate, at least to my knowledge. And so there's not really a game plan or like a playbook to follow to like replicate competition. So like, what are some of the problems you're facing, like where you're kind of like the first really team to kind of approach these situations and tokenizing real estate on chain?
I think we face challenges on two fronts. First of all, on our business side, the challenge is keeping up with the regulations of the countries that we operate in. These regulations, the compliance associated with each country, especially when you talk about Europe and the European Union and United States, a lot of these regulations are in flux. They're changing. And the challenge is, how do we best comply with them? How do we keep up with them? Number one. And then also, financially, we got to make sure that from a financial point of view, an accounting point of view, it's a challenge to keep track of, for example, taxable events that happen. And think about it. You're doing trading. Investors are doing trading from one crypto to another, and they're converting to fiat. And so there's all these different transactions that are happening, and it is our responsibility and duty to make sure that transparently we identify all the events. It could be a smart contract that does some sort of a transaction. It may or may not be a taxable event in Europe, but it'll be a taxable event in the United States. We have to be the protectors of our investors and tell them, look, these are taxable events. We have to provide the proper reporting, so that way they don't get in trouble in any way. So that's a big challenge for us, actually. On the tech side, we have a lot of technology that is in flux. We're talking about oracles, for example. And then there's also all these different chain links and different kinds of blockchains. You take something, for example, like Polkadot, right? That just is there for us to link all these blockchains. We're thinking about utilizing something like that. So a lot of these technologies are in flux themselves, and we are just trying to keep track and trying to keep up and use the best ones that we can to trailblaze our path.
Yeah, it's interesting that you touch on the regulatory environment. Like as we bring on projects, I'm hearing like a reoccurring theme with lawyers, basically. And I don't think there's a massive market to tap into to get a crypto familiar lawyer. Is that one of the challenges that you guys have faced, is finding somebody that can kind of speak to both fronts?
It is. And not just lawyers. Think about how we have a great, we just brought in a great CFO, Sherry Pelsky, and she has her feet in building organizations like us to become large organizations. And she comes from a background of crypto and as well as the traditional. And we are all, in a way, we learn new things every day. But the key here is that we can utilize our knowledge from the past and kind of take on this new knowledge that we've acquired and really just use common sense and take on these challenges and make sure we do it right. But yes, not just lawyers. We have accounting. We have people that are, this is all new to everyone. And so we're all learning in a way.
With that, quick plug, do you guys have any open roles that you need to be filled? There's a lot of people that tune in that are interested in getting into the industry.
We are growing and we are always looking for good talent. And the answer to that is yes. Visit our site, get in touch with us. Again, we need the people that are trailblazers. We need people that under pressure, they will be poised. They will use common sense. They'll work with a team. And we're looking for those people. Of course, both ends, business and technical. So please go to our site and get in contact with us. And hopefully you'll join our team.
I also wanted to circle back around, like you mentioned before, that you guys are helping with like taxation and figuring that out for your consumers, and that's something I haven't heard from a lot of other projects we've had on the space, and I feel like that's really unique and is going to be a huge selling point because if I can invest in real estate, but also have assistance with understanding the legal ramifications and tax ramifications, and you guys are working to build that out. I mean, I think that that's a huge leg up and would make even like someone who's maybe not as familiar with crypto a little bit more comfortable with actually using the product, because that's one of the biggest barriers I see when I try to onboard someone who doesn't necessarily understand crypto. Is they're like, what is the taxes? How does this all work? How is this tracked? What do I do at the end of the year? Like, there's all these questions, and if you guys can help solve those, I think that's massive.
It is the number one priority. We see ourselves as the line of as the first line of defense for the investor. The investor does not understand what a smart contract is in most cases. They don't understand what the actual code that is in those smart contracts is doing. Those smart contracts could easily be doing something during the day that is a taxable event. And we at Realty, we are very cautious about this. We audit every single smart contract. We have events that we think are deemed to be taxable events, and we have a ledger that we keep track of. So we are very, very protective of this. And as we enter the United States market, it is going to be a demand. Like you said, you yourself, when you become part of us, I hope you'll invest in one of our properties. Then we want you to feel that you are protected, and at the end of the year, that you can incorporate this into your QuickBooks or whatever tax information you have very quickly without having to worry.
Absolutely. Thinking a little bit like future forward, do you see this expanding out to like much larger properties in the future, that potentially have like thousands of units, or building like skyscrapers, or is it more maybe smaller to mid-size properties?
It's difficult to say. So in this case, it's like, where we see ourselves in like a year or 2 or 5 years from now. This industry is changing at a rapid pace, and when we deploy our realty protocol to the public, honestly, we don't know where that will take us. There will be organizations that will take our protocol and innovate on top of it and say, well, we're going to tokenize a mobile home, or we're going to tokenize a commercial property. We ourselves, I think what I see with realty is that we are definitely going to be ingrained in the landscape of real estate transactions. That is a given. But we don't want it to be all about us. We really want to have external companies and organizations that are involved in real estate. We want them to also innovate and be a part of this as well. So we're going to push that as hard, and we don't know where that's going to take us. But I can see once our protocol is there, it can be used for many different purposes. Mm-hmm.
Like would that kind of like involve like maybe like independent like brokers kind of partnering with realty to bring properties on chain? Is that kind of like one way you kind of look at it?
I think that once we get to a point where we have proven that indeed you can legally and in a very high compliant way tokenize a real estate asset, and we are in the United States market, which is one of the biggest markets in the world, I think that it's conceivable that we would have perhaps independent brokers or anyone that wishes to use our protocol. I'm sure there will be third-party providers that would have these brokers in to utilize it. I mean, imagine the case. Just thinking about what realty does. Think about this case. When we put up a property in our site, that property typically goes in about 3 to 5 minutes. That's how fast we sell a property. And if you think about the speed of how the property is sold, and this is a highly desirable thing in any real estate transaction. Of course, we're not doing this right now, but most of our properties are in Michigan and Chicago. But imagine a person who wants to sell a house. I'm not saying we're doing this, but imagine a person wants to sell their house, and they use our process, and within a matter of 10, 15 minutes, through investors that are online, they can sell their house and have their money within a matter of a few minutes. It's quite amazing, right?
I think that kind of speaks to how we were talking earlier, just with the illiquidity, right? Like, is that kind of the biggest selling point? Is just that liquidity and having that instantaneous option. Have you guys quantified like the average reduction in turnaround time of being able to buy or sell a property?
We have. I mean, if you look at a process today, it usually takes. First of all, the process is the person has to go through just once, right? They have to go through the whole KYC process, the anti-money laundering. So that takes a little bit of time. But once they're done with that, then at that point, they're eligible to own equity in the property. And so if you have a good pool of accredited investors in the United States, let's say, then yes, if we have a pool that is willing to buy the property that we are offering, I mean, I can see it being very quick, very quick. I mean, think about that. We've sold over 100 properties so far, and that's quite an achievement, right? And we only have we have about 12,000 investors internationally.
No, that's insane. I guess from your perspective, like where do you see real estate going in the future? Like obviously this is part of that, but is there something more to it?
Good question. I mean, by all indications, it seems to be going through more efficiency. There's a need to make this process more efficient in the transaction and in terms of the buying and selling. Even today, for example, you see transaction commissions slowly coming down due to the improvement, right, in the acquisition process. Agents are not getting as much commissions as they used to. Well, I know one thing: blockchain technology is well tailored, right, to improve efficiency, and it will likely play a major role in changing the industry, in my opinion, for the better. Yeah.
I am curious as well. Are for like the properties that you have in ownership, will owners be able to access like security cam footage, or will they be able to monitor the properties?
That's good. It's a great idea. And right now, what we offer is that when we launch a property, we offer all the pictures that we can. We offer the paperwork, the appraisals, and we are a startup. We are working as hard as we can, but I can see our future right now where we have the realty drone that can fly around the house and in real time show the investor the little piece of brick that they own or something like that. But right now we're really just concentrating on the reliability and the quality of our offering, and as a lot of these bells and whistles, I think they're going to come as we grow the team.
Yeah, I think you actually. I know it's kind of a joke, but it really does kind of hit on a really cool point that, like, once this is in the U.S., it just kind of makes it like the average person to be able to own a like quality like cash flow investment. Like own a piece of real estate by simply investing maybe like a couple $100.
Yeah. I mean, if you look at for example, Robinhood, right? What made Robinhood so successful is that millennials, and is that they felt like they could, with a little amount of money, be able to buy stocks. And in real estate, there was that huge barrier to entry. And if you look at a person who's making a minimum wage, they don't have a chance, right? They didn't have a chance until a company like us is coming along. And what we're doing is we're saying, look, you could benefit from this, from this industry. You are able to, even though you make minimum wage, you may not be there with some of the high net worth people, but we're going to try to bring this to you. And this is one of our, it's a philanthropic mission that we have, is let's empower the people. They've been left behind sometimes, and we're here to bring that to them, if possible, as much as we can, depending on the regulations and things like that. Mm-hmm.
Yeah, no, that's awesome. And I feel like, the most important thing, in my opinion, when it comes to investing is going from 0 to 1. I just kind of view investing as like one of these like holistic things where, like, once you kind of get involved and you kind of see the promise of investing, whether it's in real estate, whether it's in collectibles, art, investment stocks, like you name it, right? Crypto. The most important thing is just getting involved, because it's kind of like a bug. And once you get bit, you want to keep going. And one of the biggest blockers from people getting into it is they feel like they can't afford things. And so like these like tokenized ownership shares are just like it's going to be the biggest like investment boom I think that we'll see over the next like decade.
Yeah, and I think rightly so. I think that it should be one of the portfolio. It should be like a place in the portfolio of any investor, and that's what we're trying to do. But I think one of the things that we've already touched on this that makes this very challenging, especially when it comes to real estate and the companies that are offering real estate fractional ownership, is that it, from a legal point of view, it can get, I don't want to say dangerous. It can get dangerous, and if you are not careful, and so we are at Realty, as I said before, this is something that we are trying, that we're going to mitigate, and we do mitigate, is that aspect of it. We want people to have it as part of their portfolio, but we also want to have it where they feel safe. They feel that the IRS is not going to come after them. That's what we're aiming for. That's our mission.
I love that.
Yeah, now the little guy doesn't get screwed.
Yeah.
That's awesome.
Yep.
If anyone from the audience has questions, feel free to request. I'll gladly let you on one at a time.
Yeah. While we're waiting for maybe somebody to hop in from the audience, I actually just had a question that's kind of like popped up in my head. How does this work if a property gets like sold, or like, like say there's some case of like eminent domain, or some reason the building needs to be knocked down, like whatever it may be, right? Where the actual investment property itself is no longer there. What happens to the investors there? Like, how does that work?
Yeah, I mean, in those cases, so we're talking about really what is called like a transfer of ownership. So some level of transfer of ownership is going to happen, right? It could either be from the LLC to another LLC, or to some other owners, or it could be from members of the LLC, our shareholders, to another member. And so in those cases, and this is one of the advantages of the LLCs, is that even when you sell it, for example, or when something happens to it, the business may continue as before with a simple transfer of ownership. So it's not that difficult to do, and that's one of the main advantages. I mean, at this point, we don't offer the feature of how this transfer would happen because we are keeping all our properties, but it will act in a very traditional sense, just like the LLC that we have today. But there is one difference that's going to happen, and that is when anything that it needs to happen with LLC, such as an event you described, we will have what's called a governance token, like a decentralized autonomous organization, a DAO, what is commonly called the DAO protocol. We are going to incorporate in our properties the DAO protocol, and the members will have a say as to what happens in these events, and what happens to the property as a whole. They will be able to govern with their DAO tokens.
That's really, really cool. That's awesome. I don't have any requests for the audience currently. Oh, Dux, you want to come on? I got you, brother. What's going on, Dux?
What's going on? Thanks for having me on. So quick question. As far as like the Realty team, are they owning any tokens, or are they selling 100% of them? How does that kind of work?
We, the Realty team members at this point don't own any of the tokens, and all our tokens go for sale of the properties. So that's how the model is right now. Mm-hmm. However, in the future, I can see incentivizing maybe employees or other types of people coming into our organization, and it may become part of the incentive package. But again, it will be in the same level as any investor that comes in and buys our tokens.
And to reiterate, you said that the timeline for bringing this, as far as the ability to invest into the U.S., we're looking at end of year?
We're hoping before the end of the year. Look for us in sometime in October, November time. And we will, if you keep up with our community, we have a Discord community, we have a Twitter account, we have a wonderful marketing team, and you can find all that on our site. But if you keep up with that, we constantly update our community.
Awesome. I mean, I guess last question. Do you have any, opinions on why BlackRock is buying a bunch of residential properties? Any idea on what they're doing there?
Yeah, I mean, it's not just BlackRock. I mean, if you look at, there's private equity firms, many of them are just gobbling properties. And I think it has to do with a lot of cash that they have at hand. It has to do with the low mortgage rates that they have. And they have a projection that real estate will continue to go up. And it has. I mean, that has been going on for the last few years. But their motivations is sometimes actually, to me, it's we've seen history where real estate goes up and down. And that's one of the things that the reason that we actually offer our tokens as stability coins is because we don't want to deal with these fluctuations that are happening in the crypto world. Although if your real estate goes up and down, your token will also have that. But yeah, your guess is as good as mine. But yes, I have noticed that these private equity firms are just gobbling real estate all over.
Yeah, I just see it's kind of inevitable that eventually real estate is on chain, and I appreciate what you guys are doing and kind of leading the path, and super excited to see where your project goes, and I'll be following.
Excellent. Well, appreciate the questions.
Thanks for coming on, Dux. Really good questions. If anyone else from the audience has questions, feel free to request. I don't have any current requests, so you can hop in. I think that's it. Super high Chase. Any additional questions for Haytham? Oh, wait, we got Joseph. Joseph popping in last minute. How's it going, Joseph?
Yeah, I'm good, thanks. How are you?
Good, man. Welcome to the space.
Thank you very much. I had a quick question. If somebody who lives overseas, since that's the only market that you guys are catering to, is there a specific registration process for the investor based on the country they live in?
Thank you, Joseph. Good question there. First of all, with regulations, we do have countries that are blacklisted, and this is part of the kind of the worldwide regulations that we have to follow. So, given that the country the person is trying to invest from is not blacklisted, then the process is a couple things. Number one, we go through what is called a know your customer, a KYC process, and we have an external vendor that does that. But we also have to go through anti-money laundering and maybe some other certifications, but not the extent. These are the certifications that have to happen to be compliant, but not to the extent that we do in the United States, where there's a little bit more stringent requirements.
Understood. Thank you.
Thank you.
Thank you for that question, Joseph.
Yeah, thanks for coming on, Joseph. Appreciate you, man.
Thank you.
I think that is it, guys. Super high Chase. Did you have any additional questions for Haytham while we have him on?
Yeah. So say we wanted to buy like a big farm. Would you guys tokenize that for us?
Depends if this farm. I love fresh eggs, right? So you got to have fresh eggs on this farm, right?
So we're gonna have it all.
You know, well, to be in line with animal safety protocols, we're not going to tokenize the animals, right? We're just focusing on the farm itself. But that would be a wonderful goal, and I think it would be a great thing, especially for farmers that want to raise capital very quickly. I mean, they provide our food, but I think that was a wonderful idea, and I'm going to bring it right to our team tomorrow. How about that?
Yeah, no, actually, no, seriously though, you know, like as we see these rise of DAOs, like I could see, you know, property wrapping as a service for conglomerates of people. Just something maybe to keep in mind.
I totally agree. And one of our partnerships that we have is the MakerDAO, and they have culturally they believe in this governance and the fairness of governance, and they're the makers of the DAO essentially. So we're gonna follow their path, and scenarios like what you just described are likely, and I think that it would be a great thing to do. Yes.
That's awesome. I don't have any more questions. I just want to say, hey, Pam, it was great speaking with you. I appreciate you coming on and sharing some knowledge about realty. I love hearing about these like little up and coming new projects that are past that kind of like, I think back in like 2017 where we were all talking about like, like what's going to be the layer one, like cryptocurrency, right? But now we're actually talking about like real world applications and seeing what this tech can do. So it's awesome to hear like what you guys are working on.
Yeah, it's amazing that we are here at this point so quickly. I very much appreciate you having me here. It's a great show to keep the crypto community informed of all the craziness happening in this industry. So I very much, again, appreciate you having me here. I would love to come back as we mature and enter our U.S. market and give our listeners a little bit more insight.
Yeah, that would be really awesome. I'm definitely interested in following realty because I personally want to invest in real estate as one of my streams of income. So,
right,
that's awesome.
Awesome.
Yeah, thank you so much for coming on the space. I mean, I just have a lot more respect for the realty team after speaking with you. I mean, sound like a really solid group. I really I'll reiterate again. Like I really liked your approach around focusing on quality over speed when doing integrations, and actually focusing on consumer safety and not rushing the process. I think that is a really big win in my book. So yeah, definitely looking forward to staying up to date with Realty. And again, thank you so much for the time.
You're very welcome. Thank you, everyone. Thank you, everyone in the audience. Appreciate your questions.
All right, guys, stay based. We'll see you guys tomorrow.
Peace. Okay. Bye-bye.
Peace.